taking in those comments from Jim Bullard and his outlook for the Fed. We want to keep the conversation surrounding the plan for rate pass going here. Joining us now in studio is Tom Sosnoff, Tastylive founder, CEO. Tom, great to see you on set.
Thank you. Thanks for having me.
You were just listening to Mr. Jim Bullard there. What's your take? What's your response?
I kind of take all Fed stuff. I'm a trader, so a little bit different. I think traders are very different than economists. Traders are very different than analysts. And I take what the Fed has to say, or what people think about what the Fed has to say, and I think about the Fed in one way. They have something that nobody else has, which is unlimited money and unlimited duration. Mm-hmm. So eventually they're going to be right.
And they never have to hedge.
They never have to do anything. That's the beautiful thing. I mean, and when you think about it, the world of finance, they're the only ones that have that. So I look at I think people need to focus on actual bond prices and kind of take everything else and just, it's kind of more color. And when you watch the bond market, you'll really have, the Fed just plays catch up to the bond market. And I think the bond market right now has been telling a really interesting story. I actually like bonds here, but it's been telling a really interesting story. And until today, we haven't had a bond rally. I mean, it's been just straight down. And I think that today, maybe it's a flight to quality, maybe not, but I think the bonds are telling you that the Fed's hands are tied until bonds actually rally.
Let me ask you then, I look at markets through a trader's lens as well, and so sometimes I'll focus on levels, and sometimes I'll just focus on the momentum of the direction. Anything in the bond market in the 10-year, a level speak to you? Like, if we get there, this means something.
No, it's not. I don't think it's a level per se. As a trader, I don't look at like technical levels or anything like that. I don't really look at round numbers or things like that. I think that you look at context. So, for example, where was the 10-year? It's just dropped about 3 points. The long bonds dropped about 6 or 7 points. And when you think about it in percentage terms, we haven't had a pullback of 5, 7, 8% in the stock market in forever. But we've had these pretty massive moves, pullback of 6, 7, 8% in the bond market, in the long bond, and 5% in the shorter durations. And that's a pretty significant move. So I think you put context like that around it from a trader's perspective, and then the bonds look like a more interesting pot odds play than stocks.
Tom, as we head into the weekend here, geopolitics are kind of front and center today. Obviously, you got these reports that Iran may be considering this direct assault on Israel. How are you thinking about that? Significant concern for the markets, in your opinion?
I mean, obviously, yes, because the VIX today, volatility on volatility today is up about 20%, and the VIX, I think last time I looked, was up about pretty close to 20% today. So, I mean, the market is pricing in this, whatever you want to call it, geopolitical risk or just market risk at this point. But it's a weekend, and that's fairly typical. And I think that you, as an investor and or trader, whoever you are, I think you have to recognize that the market's pretty damn good about pricing things. It's the best bookie in the world. And so when you see a 20% jump in vol like today, you have to take that seriously. That's real. That's very different than than market down, no vol pop.
Let me ask you, just keeping with, so you have a unique perspective on the markets because you're in the brokerage industry. I'm just wondering what kind of retail trends you've seen change over the years, anything that sticks out to you because you get to see the order flow of your own customers. How are things different than they were a few years ago?
Well, I come from the market making side, so I spent half my career, 20 years as a market maker, and then the last 23 or 24 years building, front end software for retail investors. We built Thinkorswim and then Tasty. And so what I've really watched investors do is become very capital efficient. Like the swing has been towards capital efficiency, so they use a different kind of, the technology is so much better today, and they use a different set of products, so they're more open to being product agnostic. I think if you ask people, 10 years ago or 20 years ago, what do you do as an investor or trader? They'd tell you, I trade stocks, I trade options, I trade futures. Today, everybody's agnostic to everything. So it doesn't matter what you do. Like, product indifferent, we like to call it. So I think today's retail investor is just as happy trading gold today or crude oil because they were in play as they are trading NVIDIA or AMD.
Interesting.
And so I think that is the biggest shift in the last 2 decades is the move towards product indifference and the move towards a little bit more towards strategy and a little bit away from, hey, I think I know what's going to happen next.
And Tom, you mentioned gold there.
Mm-hmm.
There's another big story. It hit another fresh record, right? What do you think gold is trying to tell us?
Well, first of all, gold had an amazing turnaround today. It was up almost, I think, $65. I mean, I was flying out here today, but I think it was up $65 this morning. Now it's down almost 20. So it's had almost probably one of the biggest one-day reversals it's had in years. But gold's an interesting, first of all, commodities are different than stocks. So stocks, there's natural sellers because in the stock market, people are long. And at some point, it gets rich enough where they want to sell. But in the commodity world, it doesn't actually work like that. People aren't necessarily just long gold looking for a place to exit. So it's much more of like a commodity trade is a little different. It's more trendy. And I think that this gold trade has been, I don't consider it as much a flight to quality as I do think it's just been, we've been looking for places to put cash because every asset has been appreciating. And it's really more of just, hey, spreading the wealth around. So digital assets over here, gold over here, crude oil over here, basically anything that you can get your hands on that's not correlated to equities is an interesting investment.
What about crypto?
I feel the same way about crypto. I think crypto is, I can't comment on whether I think it's expensive or cheap. It's obviously not cheap. But I think crypto is the same kind of investment. Not having crypto in a portfolio is way more dangerous than having crypto in a portfolio. Like the alpha you get from crypto and the amount of non-correlation and that high volatility, which means it has a high expected move, crypto should be in everybody's portfolio, but it doesn't have to be huge. It could be 1%, could be 0.5%, could be 3%. But I think some commitment to digital assets and to that technology is really important for every investor.
Earnings season, Tom, let me get you out of here on this.
Yeah.
What do you think and what's the setup look like?
Well, we've only had a couple of stocks so far. It's just been 2 days or something. And, the last earnings cycle surprised, I think, everybody to the upside. And every earnings cycle is very incredibly random. I mean, when you break down the numbers afterwards, you're essentially talking 50-50. But I think this one, last earnings cycle, there really wasn't but one or two downside surprises. And given the level that this market's at right now, like JP Morgan's a perfect example. That wasn't that bad a number, but they kind of crushed the stock today. And I know the market's down, but I think that if there's going to be surprises this time around, it'll be to the downside. The numbers will come out 50-50. Like half will be up, half will be down. But the surprises last time were all to the upside. I think the surprises this time will be the downside.
All right, we got to let you go here, but learned a lot and I really appreciate you stopping by. Thank you, Tom.
Thanks for having me.